Before going into the video, I would like to congratulate all of you for taking your first step to financial freedom. While learning this course about the complete stock market that we are providing for free on YouTube, make sure you keep a notebook and maintain your notes. That will help you to refer later on. And also make sure that you comment down your attendance and watch the video without skipping. In this video, you will be learning the basics of stock market. That is the introduction to stock market, what is stock market, what happens in the stock market, who all are the participants in the stock market. What is stock market? The basic definition says that stock market is a place where securities like shares of a publicly listed company are traded. That is a place where we can buy or sell shares of a company. For easy understanding, I am explaining it with an example. Just imagine it as a place, a market, a normal market, a building where companies come and sit and sell their shares for the money that we are giving. Okay? It is that easy. But what is a share? To know a share, you should know what a business or what a company is. So, any business or a company will have a valuation, right? If you don't know what valuation is, a company will have a lots of assets and liabilities, right? They will have buildings, they will have their inventory, they will have all their stocks in the sense not the stock market stocks, but whatever they are selling, the services, products, they will have employees, they will have payrolls to be paid. So all these assets and liabilities together bring out the total valuation of the company. So, for example, think that the total valuation of a company X that you own is 10 lakh rupees. And if you want to find a new partner to your business, with what unit will you give it? That is, if your company's valuation is 10 lakhs, and if you wish to give someone 50% of that, in what units will you give? Exactly, that is called a share or a stock. Share or a stock is a small unit that sums up to make the total valuation of a company. I think you got that. So, who decides the number of shares? So, the number of shares is fixed by the founders or the people who formed that company. Okay? So they decide how many number of shares should the company have to make the total capital. It is done at the time of incorporation of that business. So as you have understood what a share or a stock is and about the basic definition of stock market, now it is important to know what are publicly listed companies. So you know there are lots of businesses around you, right? Even you might be a business owner. So what is the difference between your business and a publicly listed company? A public listed company has sold its shares to the public that a normal private limited company cannot do. Why does a company go public? A company goes public when they need more funds for their expansion. So you might ask me, can't they find a new partner? Or can't they lend a loan from a bank? The reason why companies choose to go public, if they are eligible to go for an IPO, that is initial public offering, that is the procedure through which a company goes public. So if they are eligible for that, companies choose that over the other means because a loan is a debt that should be repaid. And if I find a partner, there are lots of things that I have to consider. Like, the person whom I find should have the same mindset as of mine, or else our ideas might contradict. And the second reason is that when I find a partner, I am giving him a huge portion of my shares. I might be giving 20, 30, 40, 50% of my shares to that partner to take him into the company and raise funds, right? So he will have a very high managerial role. He will have a huge role in the management. He will be in the managerial decision making. he will be involved in making decisions for the company. So if I don't find a person who thinks like me, who can work along with me in the same mindset, it is going to be a difficult task for the company. So the easiest way is to go public and raise funds, because we as retail investors will hold only a very small portion of the stock or the share. We wouldn't have a managerial role in the company. We won't be involved in the managerial decision making. So they will get the money that they need, and they don't have to fear that the investor will have a managerial role. Let's come to the second participant of the market, the brokers. So, can we directly go to a company and buy its share? The answer is no. We can only buy the shares of a publicly listed company through a broker. That is the second participant of the stock market. Brokers play an important role, and choosing them wisely can help you save a lot of money. There are two types of brokers, a full-fledged broker and a discount broker. If you don't have much time to invest, if you want them to do the studies and invest your money, your full-fledged broker or full-time broker will do the job for you. But if you are actually interested in learning stock market and making your money, choose discount brokers. We'll have a completely elaborate video on that. Now I'm going to the third participant, that is depositories and depository agents. So there are two main depositories in India, the CDSL and the NSDL. And these depositories gives you demat account, a dematerialized account for you to start your investing. So what is a demat account? When you buy these shares, they should be stored somewhere, right? So years ago, whenever you used to go to a broker and buy a share, they used to give you a share receipt. But as time passed and life became more digital, they made it dematerialized. There is no paper evidence that they are giving to know that you had a particular share of a particular company. Rather, they made a demat account, a dematerialized account, and that stores your stocks. So these demat accounts are made by the depositories in India, and there are two main depositories, CDSL and NSDL. And about depository agents, banks can be a depository agent, your brokers can be a depository agent. Why? Why are these people depository agents? Depository agents are people who can take a demat account for you. You can't directly go to the depositories and get your demat account. You need a depository agent for that. And finally, we, the investors, come into the play. And are we, the retail investors, the only investors out there? No. There are foreign institutional investors, domestic institutional investors, foreign direct investors, domestic direct investors. So there are hedge funds, mutual funds, all of them on the market, investing in the stock market that you are also participating in. And to make sure all this works properly, there is SEBI, Securities and Exchange Board of India. That is now a statutory authority that takes care of all the legal matters, all the proceedings that's happening inside the stock market, and make sure everything is done properly, that there is no frauds happening in the stock market. So these are the participants of stock market. So now I will explain how does demat account work, what is a demat account, how can you open that. So now you see this diagram, the savings account, a trading account and a demat account. I'm going to tell you what these are and how you can open your demat account. Demat account, as I said, is a place to store all the stocks or the shares that you have bought. So how can you open your demat account? Opening a demat account nowadays are very easy. If you want to open an account on Upstocks, the broker I use to make my trades and investments, you can check the description to get the link to open your demat account. And if you already have a demat account, well and good. So you might all know what a savings account is, right? It's the basic bank account that everyone will have. You have your money in the savings account Okay, when you open a demat account through a broker, they provide you something called a trading account. Okay, that when you put your money into Upstocks, Zerodha, like angel broking, like any of these platforms, this money is actually put into your trading account. So you generally open a trading plus demat account. You are never opening just a demat account, you are opening a trading account with that. So when you want to invest, you transfer the money in your savings account to your trading account. Okay? Your savings account to your trading account. And from your trading account, you are buying shares of a particular company A, B, C Limited. Okay? So when you buy this share, the amount per share of this particular company, if say this 100 rupees and you bought 10 shares, 1000 rupees from your trading account will be deducted and 10 shares of ABC company will be bought and it will be stored to your demat account. That is how the demat account works. That's all in today's video. In tomorrow's video, we will be learning what is an index, what are sectoral indices, what is Nifty, what is Sensex, and how does these help us in our trading or investing journey. See you tomorrow. Bye.